You're watching Wall Street Confidential on TheStreet.com TV. We're discussing the big economic news today, the retail sector. We're learning from the Commerce Department that retail up 0.3% in January thanks to people buying more gas, buying more cars. But can we really trust this number?
Well, it's interesting. People take this number. There's two bullish camps out there. One is the people who think we're in a V recovery, we go down and then sharply come back. They were bolstered by the January retail sales number. And then there's the camp that I call from the Seven Dwarfs, the dopey camp, that genuinely believes that there's nothing wrong out there. So they came in and bought the market very aggressively at the opening. Because of the nature of the dopey camp, they will try to keep the market up all day. Now, there's some expiration pressures that typically happen on Wednesdays, but I believe Wednesdays is tend to be up for expiration. I believe that you will that these two groups will coalesce to try to keep stocks up here. There's a Citigroup rumor that Doug Cass mentions on Real Money Silver about how Citigroup may have a fund that broke the buck, the money fund, and that's causing some havoc in the market. But I think that when you have two groups at the same time taking a number that is anti-recession and running with it, you get that. Now, I obviously am not in the camp that we want strong numbers here. I know there's a good debate between Bob Morrison and me going on, very sub rosa. But I need to see all numbers to be weak and to see it be obvious. And I typically don't like to do this, but the Fed is so dense and so unsophisticated that it has to be really obvious that there's a recession for them to continue to cut more because they're very reactive. I've been reading a lot of articles that now they're on the curve. I mean, no, they're not. I mean, I think that a number like this January retail sales number gives them ammo to do nothing, gives the guys who are really hawkish in the Fed, and there's a bunch of them, a sense to be able to say, listen, the cuts are working, we don't need to cut anymore. We're not cutting because of the economy. We're not cutting because of retail sales. We're cutting to preserve IndyMac and MGIC, which had a horrible number, but these guys are just they're just plodding along, hoping to stay in business until there's a turn. Because they have capital, they're going to. But we're plodding along to save Washington Mutual and to save Citigroup, and you got to lower rates to be able to make it so that they're able to take the people whose loans are being reset and offer them terms. And it's all a big part of a puzzle that the Fed doesn't want to acknowledge and the Treasury Department doesn't want to acknowledge because they'll look at numbers like retail and say the fundamentals are sound. It has nothing to do with the fundamentals. It has to do with credit risk and a bunch of institutions that are overextended.
All right, Jim Cramer on retail sales, thank you so much. This is Wall Street Confidential. Don't go away.
That's your action point. Take advantage of it.